Good morning. Okay, so we had a pretty big drop overnight after China announced um, tariffs. Sorry, I'm trying to. Where do I get the levels twice here? Anyway, ignore the levels that you see down here. Um, so we had a huge drop. I had to pull the 2-year profile because on the 1-year profile there was nothing there, and as you can see here, we stopped right ahead of this support area, which is we had from back in the day. We had a few single prints and a low volume node, low volume area, which is between 5180 and 5155, somewhere around there. Overnight we have a double distribution. Obviously all inventory is 100% short from yesterday's close, I believe. Yeah, like 99.9, I would say. So now the question is, do we just consolidate here and accept prices in this distribution, or do we come back, fill the single prints, and attempt to close to fill the gap? Obviously, as usual, we look for the same things no matter how extended the ranges are. And if we get inside yesterday's range, then looking for how we treat value, right? We should see sellers at value area low, but if we accept above value area low, then we should see a sweep in of value. And I'm not discounting that scenario because of the volatility that we're having. That means that we can expect big moves. Doesn't necessarily mean that we're gonna get a bounce, but I'm not discounting that scenario, even though it looks pretty stretched. Even looking at possibly squeezing some shorts and getting back and closing this gap too, it's a possibility. Not saying that's gonna happen, but want to include it as part of my plan. But so far sellers are strong, and if we come back and revisit the lows, we have an untested point of control right here at around 5200, and then we have some support here at 5180. But the big magnet on this 2-year profile is down here, 35-ish. We have this high volume node. Probably not for today, but it's a level to keep an eye on. But that's about it. I'm gonna be looking for whether this distribution gets accepted or not, and if we break out, probably attempt to go with a breakout and target this 5380 area. Actually, it's a little lower. I think it's 5375-ish. And then again, in here, we either come back from here and maybe stay rotational, chop around, or we just take this distribution and close the gap. In Q, everything dropped. In Q, same thing. I had to turn on my 2-year profile. Nice level here at 16,850. That's big volume there. some support here at between 900 and 600. That's a 300 point low volume area that we just bounced at. So if we take that, then this 500 level, I mean, it's kind of, it kind of feel stupid saying all these levels because they're so far away and like so like, okay, well, we drop another 300 point, 400 point. I mean, anything could happen today, honestly. So, you know, I'm just looking at these areas where we accepted to see if we can come back to them and go and sweep those ranges. That's pretty much what I'm looking at. And you have to be very careful, trade small, because the moves are ridiculously insane. We haven't seen moves like this since COVID probably, and you know, even the ranges are like biggest in history, I think, or second biggest in history. So just be really careful out there. I posted yesterday the levels for the CME limit prices. So keep an eye on that so that you don't get caught with the market limiting if we get there. Gold at one point was up, then it came down. Now back below this low volume area, and I think the magnet is here. Even though, you know, gold might be it might be bullish news for gold. You know, when there's margin calls, everything gets sold. Doesn't matter. Oil, gold, everything, silver. You know, looking at 3070 for a magnet to the downside if it keeps. If it keeps selling off. We have Fed speaking. Keep an eye on the news too, because Trump may see this market and may want to talk about it and try to calm people and say how great we're doing. So market cut rip out of nowhere. All right, that's about it.